Greetings, everyone. I'm excited to welcome Riya Grover, co-founder and CEO at Sequence. Riya, welcome to the show.
Thank you, Ben. Thanks for having me.
Yeah, great to have you here. Excited for this one. So let's kick this off first. Tell us a little bit about your background.
Yeah, sure. I guess I started my career in kind of relatively traditional sense, investment banking, but really have always been very entrepreneurial. Was the daughter of two entrepreneurs and kind of always knew I wanted to build a business and kind of couldn't wait to do it. So in 2015, I started my first company, SaaS platform in the restaurant space. So selling into restaurants and food service providers with, ordering, payments, loyalty, and kind of verticalized software really for that industry. We scaled that very quickly. We grew into kind of a few markets. We built that company over about 4 years and relatively kind of close to bootstrapped, I would say. So a little bit of capital, but it was kind of a very lean operation. And we had all the challenges that came with that. I sold that business to Compass Group in 2020. And loved that kind of seeing that full life cycle of building a company, scaling it and exiting it. I had a couple of years of earnout with the buyer and then decided to build again, which is when we started building Sequence.
Oh, that's great. Quite a journey. So finance right into SaaS. And I was going to say the restaurant space seems like a big space because I've had a few founders on, tackling the restaurant vertical. So that's really interesting. I'm sure a little bit different than what you're doing now other than SaaS.
Yeah, very different selling kind of software into that industry versus B2B enterprise software in the financial operations space. But nonetheless, obviously some shared learnings and some parallels.
Yeah, I think it's really interesting change. So let's talk about Sequence. So what's your current company and tell us a little bit about that and the products and their services it offers.
Yeah, so Sequence is a modern billing and quote to cash platform. So we help companies who have custom contracts, custom pricing structures to automate that full workflow where we can capture sales contract data and enable finance teams to automate billing, invoicing, revenue recognition, really kind of all the receivables operations associated with that contract. It's actually interesting. While I was building my first company, we were B2B. We had kind of pretty much different pricing across almost every customer. We deployed kind of more advanced pricing structures like usage-based pricing, seat-based pricing. And really we couldn't find anything on the market that enabled us to, take a contract, build an invoice against that without, either spending a ton of time doing it or having to kind of get lots of different point solutions to stitch them together. We looked at Stripe, but Stripe is really designed for sort of self-serve e-commerce businesses, businesses. And, our thinking was like, surely every B2B company out there has this pain of running a sales-led go-to-market motion and all the downstream chaos that creates for finance teams when, sales celebrate getting a deal closed, but then, finance teams have to spend a ton of time, invoicing those customers, chasing payments against those invoices, recognizing revenue against those contracts and all the edge cases that come with them. Can we build a really kind of flexible, easy to adopt, highly configurable platform that allows you to kind of come in and just start automating that quote to cash workflow very quickly?
Yeah, and I kind of call it like that's the CFO's utopia, quote to cash, and just having that all linked up and flowing nicely. And so it sounded like this really came up, like you had this pain point when you were serving restaurants, had your restaurant SaaS, and just figuring out how to then invoice your customers. Is that kind of where the idea started forming?
Yeah, I think like many entrepreneurs will have a seed planted and some pain point or friction they experience. And for me, there's very much a direct correlation. We ended up building all of our billing infrastructure in-house. And particularly on things that, when you're charging based on usage. Today we see a lot of companies charging based on outcomes. That's a big product surface area to sort of build and massive distraction from building your core product.
Yeah. So tackling B2B. And so what is your ideal customer? What's that sweet spot? Do you have verticals that you're after or agnostic there, company size? Tell us a little bit more about that.
Yeah. I mean, I think our ICP is today, scaling SaaS companies in Series A or earlier, even right the way to kind of pre-IPO. SaaS, fintech, AI are core verticals for us, but, really every B2B company has this problem. So we certainly have companies in, the health tech, prop tech, utility spaces, especially as often also these companies will kind of deploy more custom pricing structures and models like, milestone-based billing or sort of different flavors of usage-based pricing as kind of very kind of inherent as part of their industries. So today, I guess scaling SaaS companies and amazing logos that we work with, companies like Flatfile, Runway, Incident.io, Bridge, which is actually a Stripe company, Legora, at Bill.com, one of the teams at Anthropic. So really kind of great set of logos and a fairly wide range in terms of scale of company. I think the pain points vary depending on the stage at which a customer adopts us. When they're very early, it's, they want to get something scalable in place. From the early days, they have a pretty lean team. They don't want to make a dedicated finance hire. So this gives them the ability to just automatically collect revenue against their contracts and experiment with pricing. As you get to later stage companies, who might have thousands of contracts in the business, there's actually a very real risk of revenue slippage where those companies, by running these kind of disjointed, fragmented processes across that workflow can, actually leave some material revenue on the table. I can actually give you an interesting example of that. We have a kind of a large fintech customer who, very high invoice volumes, and they use Stripe for billing previously, and they're a seat-based model. So, very naturally, their customers are adding seats in the middle of the month, as many SaaS platforms will see happen. With Stripe, one of the limitations is that you can't actually prorate those seat upgrades in real time. So, that upgrade happens the end of the month, but you've missed out on that 15 days of incremental revenue from that seat upgrade. And so just by kind of switching to our infrastructure, they were able to, increase their revenue pretty substantially, 7 figures kind of overnight, which is powerful.
Yeah, no, great use case. And so SaaS focus, Series A beyond scaling SaaS companies. And then there's a lot of players in the space, and some you've seen they just have a usage focus or just certain focus. And would you say, if I came to you, I'm a SaaS CFO and I've got, pure subscription revenue, I've got some usage revenue, I've got professional services. Are you pretty much able to handle each revenue stream that I need to invoice?
Exactly. And with very fast adoption and the ability to change those pricing structures very easily as you grow. I think there are definitely some players kind of specifically tackling the billing space, but one of the kind of core differentiators for us is that we make the process of capturing contract data upstream really frictionless, because really that's the kind of core upstream data record. That's where it starts, right? You need to bill what's in that sales contract. So companies can either forward in sales contracts that are closed into Sequence, and we'll extract that data and set up kind of billing automatically for the finance team. Or we actually have a SequenceHQ module where sales teams can configure contracts in Sequence, and then we'll push that data automatically into Sequence. And I think that really eliminates so much of the friction and the risk of error in taking sales contract data and sort of automating the receivable side of things.
Yeah, definitely that graduation point. I mean, it must have software, in my opinion, of course, as a CFO, but yeah, to kind of doing things manually and then, getting more sophisticated with the whole process. And then let's talk a little.
And actually, one of the things that we see is, so it's not just companies that have hybrid pricing models that will use us. Often we'll see companies who have kind of hybrid go-to-market motions as well. So maybe they started PLG, self-serve, and then they built an enterprise motion over time. And actually, they really want to be able to handle revenue collection for both of those go-to-market motions in a single unified platform. And so that's also a very common reason that companies switch to us.
Yeah. Definitely when you're shopping software like this, you've got to talk go-to-market motion, because that can dictate where you go to, because some aren't built for different types of motions. So yeah, great point. And so what year did you found Sequence?
So we founded in 2022. We actually started building something that was more payments focused in our first year. But actually, through speaking to a lot of the fintechs that we're servicing today, realized that for a lot of companies, the problem is further upstream. Payment automation is easy when you have really a kind of structured data set and a structured workflow that actually, creates invoices off the back of whatever you're selling, and then enables you to drive that payments automation. And we saw a pretty big gap in this space where you've got a bunch of legacy incumbents that were really built in the, let's say, kind of subscription economy, pretty rigid with respect to what pricing models you can implement. And then a bunch of very PLG-focused players that don't really work for these more custom contract structures and sales-led go-to-market motions. So we sort of pivoted the business in 2023 and really started building into this space. And so now have been running kind of for sort of 18 months to 2 years, this business.
Really the current thesis. Yeah, it's interesting because usually I'm interviewing founders, pretty recent off a raise, seed, series A, B, C, and so on. But we were talking before, you raised 18 million in 2022. So like, right, yeah, when you founded the company and then pivoted in 2023. So just curious, were there conversations then with those investors, say we're a year in and it's like, well, we see a different focus or where should we go? Like tell us a little bit more about that experience, because I do talk to a lot of founders where they reach a point where they pivoted and maybe that thesis changed, but those investors invested based on that initial thesis.
Yeah. So we did raise capital like very early in our journey and, meaningful capital. I think in hindsight, the thing that gave us was the ability to build an exceptional early team and attract really top tier talent. And I think, I really believe that ultimately sets you up for success, whether you're building the thing that you plan to build or something else. The first 10 people you hire informs the talent bar of everybody else you hire after that. And so from that perspective, it was a great decision. On the flip side, if you decide to pivot, you've got to go to your investors and make that tough call. We had revenue with the first business that we had built, or the first product that we built, and we had to really kind of make the decision to shut that down. It's pretty scary as a founder. You have a duty to your investors and you're a year in and you're like, actually, we're going to change course. But when we spoke to our investors, we said that we could continue building the business that we're building today, but we don't necessarily see it as a generational company and something that can be a huge platform. We want to build something that is generational, and it's a bet that we're taking, but we believe it's worth taking that bet. And a lot of companies do that and the bet doesn't pay off. But I think thankfully for us, the bet has. We really found very strong product market fit and traction, scaled extremely quickly over the last 12 months. And I guess now sitting here, I'm glad we took that bet.
Yeah, and interesting. So it sounds like investors are okay with that change and that pivot, and right, we're in this with fundraising, like we raise again, but then you see some people out there saying, hey, like I'm just going to take the capital I need and I'm going to run with it and run the company. So it's been a while since you've raised, and of course then pivoted with those dollars. And what does the fundraising journey look like going forward, if anything?
Yeah, I think we built a lot and grown a lot with a relatively lean team. And, in today's environment where there's just more and more automation at our disposal, I think you could do a lot with leaner teams. And you have the benefit that you have everybody's really close to the customer. There's very tight information density across the team. We do, I think, given the growth trajectory that we're seeing and the immense market opportunity out there, to really build a kind of category leading product for revenue management in the CFO stack. We do plan to raise more capital later this year and scale the business scale our team further from here.
Okay. So maybe a fundraise coming up here in the future. And then, it's been years, of course, since 2022, 23 in that pivot, but any lessons or just things that come top of mind on that pivot, because I'm guessing there are other founders listening right now who are thinking, boy, should I change course? So anything that comes top of mind that you'd like to pass on to other founders who are considering that first pivot?
Yeah. I think actually this is maybe a lesson that I think I learned in my first company, and I guess something that that was helpful perspective when we made this decision. I think it's really uncomfortable to do it. And definitionally, it means you go longer without delivering something meaningful to your investors. But if you have that gut intuition with what you're building, that you put something out in the market and you look at the competitive landscape, you look at whether you have any meaningful differentiation, and as a founder, you can't quite see it. You don't have a really strong thesis about why you will win with that product. I just think it's so important to do it. And it actually happens so often. So many of the products we know today, started off, whether a hard pivot or a soft pivot, nobody knows exactly what they're going to build day one. They're going to talk to a bunch of customers and that thesis is going to likely evolve. I think one lesson I would share with other founders thinking about this is it's not just about, your strategy and your product changing. When you change things, it might necessitate a change in the shape of your team as well. And like, as an example, when we were more payments and API focused product, the shape of our engineering team, the requirements of, on the product and design and actually even go to market side, actually were pretty different from what we needed to build a, great kind of front end, low code experience for our customers. And I think my advice would be to founders to try and change that shape of the team as quickly as you can. Like really take ask the team transparently, like who's in for this, and make sure you actively hire for the skill sets that you need and have those tough conversations with people on the team that really no longer fit with the vision for what you're building.
Yeah, and that's a great point. Yeah, you think with the pivot, hey, just product we're changing, going here, but then you built your team based on that subject matter expertise, which may be totally different.
Sure.
So love that. Well,
and I get that our case, we were always putting in place a product in this sort of financial operations space, and so I think there was kind of overlap with what we were doing, but I think you see some teams really really hard fully pivot into something entirely different, and sometimes this piece is kind of forgotten. You kind of you plow forward with the existing team, and it doesn't always work.
Yeah, definitely. And so I'm really curious as a CFO, your go-to-market motion, because you're after B2B SaaS, B2B CFOs. So tell us, how are you finding these CFOs, getting them away from their spreadsheets to talk to you about your product?
Yeah, it's been a journey actually in terms of how we've grown. I think in the early days, like really leveraging warm connections, network connections on LinkedIn, our investors, kind of portfolio companies. And then we built kind of pretty strong sort of B2B outbounding go-to-market motion. We'd reach out to companies and, with some compelling messaging on like, here's a couple of lines on what we're doing differently. And actually that got us some really strong early traction. But one of the things that, recently that's really moved the needle for us is we've invested very deeply in content about, why customers are adopting us, what their workflow looks like today versus before, why they're migrating from legacy systems like, Maxio and billing platform and ChargeBeat to Sequence, how long that migration took, what are some of the tangible benefits that they get. So that kind of content I think is really resonating and is driving a lot of inbound. We also have, exceptional 5-star kind of G2 reviews. Our customers are driving a lot of word of mouth for us. And we're also kind of pretty deeply immersed in the partner ecosystem. Work with fractional CFOs and accountants. We work with other players in the CFO tech stack. So we think about like the next generation CFO tech stack. You have players like Ramp who are helping companies automate spend and procurement. You have companies like Rilla and Campfire that are kind of next generation ERPs. Got companies like Amrock, Numeral that are disrupting sales tax, and we partner actually with these companies very closely, both from an integration standpoint, but also in terms of putting on great events for CFOs. We're doing a user conference in September in San Francisco where we've got some, amazing companies talking about how they see the future of finance teams, finance automation, agents in FinOps and so forth. And so like that's really helped us, I think, build strong community engagement. And, ultimately, I think today you're seeing a lot of CFOs looking at their existing tech stack. A lot of the products out there are very painful to work with. It's like a lot of workarounds you need to build to really kind of work for the workflow that you want, the pricing models that you need. And I think with a lot of the modern players, we've been able to bring implementation times down to, a couple of weeks, less than a month. You can make the decision today and have something in place ahead of your next billing run. And I think that's compelling for CFOs, and we're excited to partner with other players who are doing the same.
Yeah, definitely a lot of change, especially accounting ERPs, big changes there. And I'm looking forward to my next tech stack survey Q4 because I think there will be a lot of change and a lot of pressure on existing incumbents. So yeah, there's a shift coming, or it's started already.
Yeah, just on that point, Ben, I mean, I think when we first started this, sometimes people say, look, we're kind of frustrated with Maxio or Zora, but actually like billing's really sticky and we don't, root that out. But actually what we're seeing today is the migration experience being, so automated and so rapid. The fact that companies can kind of immediately see how flexibly they can, run these workflows, translate their business model into Sequence. Really, I think it is making the mindset around adoption and switching is changing.
Yeah, I think that time to value and the migration, a big deal with switching accounting related systems, which can be a big pain, fit it within your window, not budget season, not audit season, so yeah, there are only a few times a year you can do big changes like that. And I'm curious, with CFOs, very numbers oriented. So tell us a little bit about your pricing model.
So we have a kind of platform-based subscription pricing model that scales with, I guess, the level of ARR a company is at. And then we have sort of some products that have a usage-based component to our pricing as well. I think one of the frustrations with incumbents in the space has been, like Stripe and ChargeBeat, obviously charging a percentage of revenue, which, especially for B2B companies where they might have a smaller number of larger contracts, isn't necessarily the most sustainable model as they scale. But we've taken a hybrid approach to our pricing, and depending on kind of whether we're servicing a customer with a small number of contracts with large values versus a very large number of contracts with smaller values, we can kind of adapt our pricing to really fit something that makes sense for them as they scale. But actually pricing is an interesting point because, we dog food, we use our own product, and our pricing has changed 4 or 5 times as we've grown, as we've added new products. So, today we're a multi-product suite, and our product suite is pretty modular. So we have, CBQ, billing, like dunning receivables, invoicing, revenue recognition, and different companies might land and expand in different ways. And so because of that, we've had to adapt our pricing as our product suite has scaled. Not everybody adds the reporting module. And it's been really helpful actually having our own product, because we can change our pricing as much as we want to. And it's very easy to then kind of continue to sort of automate and track, all the revenue in your business and the billing and invoicing that you need to do.
Yeah, definitely a lot of good feedback using your own product. And so interesting. I know because CFOs can get a little sensitive on how the pricing is created and who's creating value, you or the company. But really, really interesting. So Riya, at this stage of your business, do you have a favorite number or metric or operational metric that you're using to guide the business?
Yeah, I mean, a few, of course, but I think one that is really important to me is our NRR, so our retention, net revenue retention. I think that it's a metric that really captures both churn and expansion in one number, and is a really, really strong signal of how good a job you're doing with your customers. So, if we're doing our job right, customers, they stick around but grow with us. They expand both in terms of their own scale, but also in terms of the kind of modules and number of workflows that they adopt with Sequence. Typically in SaaS, a strong NRR above 100% means you're delivering real value to customers. We're really proud to say our NRR is 143% today, with minimal churn in the business and like a lot of expansion within our accounts, as customers adopt kind of more Sequence modules and also grow organically with us.
Well, that's great. That's a big number. Yeah, definitely a number to be proud of. So net revenue retention at some point, a must-have metric for every recurring revenue business. So it makes a ton of sense. And then a few stats and figures here before we wrap up. Do you have a headquarters location?
Yeah, New York.
Okay, so New York based. And then what's your current team size?
So we're about 30 in the business today. And relatively lean, which, as I said, I think have been a superpower for us, but are scaling very rapidly. So expect to be kind of accelerating the hiring over the next year.
All right. So check the careers page at Sequence. So, and then anything you want to share around revenue ranges, ARR ranges, sense of scale for Sequence right now?
Yeah. Kind of coming up towards the 5 million ARR mark this year. So kind of given product in market for kind of 12 to 18 months, very excited about the growth trajectory. And it's really just starting for us.
That's great. Yeah, that's a big number, 5 million, then 10, and then so on. So congratulations on the 5 are coming out. So
Thank you.
Well, we really appreciate your time today as we wrap up here. Tell us what's coming up next. What's exciting coming up this year for Sequence?
Well, I mean, it wouldn't be a great podcast if we didn't talk about AI a little bit. We have a really strong vision and plan for how agents are really going to transform quote to cash. I think this is a set of workflows that are pretty manual, repetitive, time consuming for our customers, also like prone to error, and agents can play an incredible role in supporting humans and doing their work faster, and also kind of mitigating risks. So, spotting contract risks, making sure revenue recognition schedules are correct, making sure there are no invoice anomalies. And so some of the agents that we've launched and will be launching this year include contract intake agent, which will essentially enable you to just forward contracts that are signed or, upsell order forms into Sequence, and we will extract all that data for one-click billing. Our dunning agent, who will be able to sort of manage all communications and payment chasing and escalations with customers where you have unpaid invoices to really bring that DSO down. Our invoice review agent, who will kind of take a first pass at reviewing and auto sending out invoices, only flagging those for human review that need review, and kind of others include revenue recognition assistance. So Sequence automatically creates journal entries off the back of the contracts and billing data that we have in Sequence. But what we often see with our customers is that, they want a sense check that they're treating, a certain contract in the right way. And so, literally some of our finance teams that we work with will say, well, we'll just drag our contract into GPT and we'll just sense check what the deferred revenue treatment for this should look like. And so we thought, well, people are doing it anyway, let's build it into the product. And so now we will, I think with finance, it's really important that something isn't a black box. So, it's one thing to create automatic journal entries for teams, but they really want to understand what calculations were done under the hood and why, both as an audit trail if they ever need that in an audit, but also just because they want to feel really confident in the approach. And so these agents in Sequence can be added, fine-tuned with your own business context. We have an interface so you can review all the work that agents are doing with really clear kind of activity trails, and they will flag things for human review. So really kind of digital labor and human labor working side by side. And I really believe that this space is one that, will, I think, really, really benefit from AI-based automation in product. And finance teams of the future are going to look very different. Leaner teams of human operators really supported by best-in-class products and the opportunity for much more consolidation. So you should have one product to manage revenue, one product to manage spend and procurement, one for FP&A and your ERP and your set.
Yeah, and that's the big, the battle, or not the battle. It's like just all the reports that you see, like AI in finance and accounting, and it's really penetrated here. But then you see other stuff, and when I talk to CFOs, it's like, like we're watching, we were using some stuff, and it makes sense for non-number processes. Like, all right, following up on an invoice makes total sense. Maybe reviewing a contract, total sense. But when it's actually posting numbers, I think, right, that's when things slow down, because it can't just be, hey, figure out the rev rec, post it, do it. All right.
Well,
all good.
What you see is it's sort of incremental steps, right? So let's take Ramp as an example. Their AI will propose a kind of category to match to a transaction. And sometimes when it's seen that enough times, it will just post it. But very often it will propose a category, and the human will check it, and that AI learns over time. And in a very simple way, you might not want the AI completing all the steps in a workflow, but if it shares with with the human, this is how we suggest, adjusting that journal entry, and a human signs it off because it's given all the kind of reasoning as to why it wants to do something. Over time, it might be the case that actually humans just wanted to make that adjustment automatically. And I think we're going to see an evolution there.
Well, and I think what you mentioned before, the really important to me is that the documentation. Like I've got to, if we're going to intake a contract, that's going to figure out the rev rec and all that stuff, but it's got to be documented, right? It's got to lay out that work paper, read it. Do I approve it? Does that make sense? All right, go forward. And just like you said, it's just a slower process. AI is still involved, but we can't just let it run its own course without, like you said, just reviewing, what it's doing. Because when the auditors come in, right, they're going to be asking.
And one of, I guess, a thesis that I have is that, when you've got this system of record, so we have a data set that covers contracts, billing, invoicing, and revenue. And this data set is really powerful in a business. So we can really build, design, and train these context-aware agents to conduct very specific, focused finance tasks. So you have an agent that is just responsible for dunning, and we've trained it to really understand dunning. And then businesses can train it further with, their own logic for custom nuances that they want this agent to understand. I think what you'll see today is lots of operators are pasting stuff in GPT and speeding up their work. But as you said, you don't have that audit trail. You don't have the learning and the benefit of this agent having done that task multiple times, context aware in a proprietary system of record. And that's where we see a lot of opportunity here.
Yeah, definitely. It's just a matter of time. So, well, we really appreciate your time today, sharing your journey. If listeners would like to learn more about Sequence, where should we send them online?
So you can find us at SequenceHQ.com. And you can personally email me. I'm Riya, RIYA, and SequenceHQ.com, or kind of hit me up on LinkedIn. And yeah, I think, hit our website and there's a demo link on there, and we, get someone on the phone with you that day.
All right, well, sounds good. Check out SequenceHQ.com or just email Riya directly or check out their LinkedIn stuff. So Riya, really appreciate your time today and sharing your journey.
Thank you. Thanks so much for having me, Ben.